Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Wednesday, May 3rd, 5:17 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, large cap uptrend continues. If you've learned anything from watching these videos over the last few weeks, it's that you know that the regional sector ETF ticker is KRE. We've been saying to avoid this since this nonsense started a few weeks back. It calmed for a while. It's back again. Hard reversal in regional banks into the close, and now after hours, at least one bank down, regional bank down over 50%. That's PACW. And the regional bank ETF is down, let's see, about 5% after hours. This happening 3 hours after Fed Chair Jerome Powell said that the banking system is sound and resilient. I'll let you uh, be the judge on who you want to believe, him or your eyes and ears when you see what's happening with these regional banks. So let's go over to the trend gauge. Leaders neutral. Leaders actually holding up pretty well. A couple of tickers joining the leaders list today with strong earnings gaps higher that held follow through yesterday from a strong earnings gap. We'll take a look at some of these charts when we get to the tail of the tape. Short term, things got a bit worse today. S&P and the Dow broke the 21-day exponential moving average after breaking it last week, getting back above it, back below it again. NASDAQ still hanging above as the big cap NASDAQ stocks seem to be a safety trade. Now we'll see if how that resolves with Apple tomorrow. Apple actually down about 3% after hours. Qualcomm reported, and they're an big Apple supplier, and they did not. Their earnings are not being well received. Let's say that. So we're through the Fed. Now we got to look at Apple after hours Thursday, and then Friday morning before the open, the latest jobs report. Medium term, still a split tape, mid caps and small caps below the 50-day, large caps above the 50-day. Same thing with the long-term 200-day moving average. Mid and small below, the three large cap indexes above. So what happened today? Kind of mixed messages from the FOMC. So the statement came out and they replaced we anticipate further tightening with we're determining whether or not there needs to be further tightening. And the markets initially reacted positively to that. Then Powell started his statement and his Q&A, and he made two statements that were not positively received. The first one was, we anticipate inflation. It's going to be difficult to get it to anywhere near the 2% target. And then he said, despite what the markets are pricing in as far as rate cuts toward the end of the year, he said, we're absolutely not considering rate cuts at this time. So that the range while he was talking, and then when he finished at 3:15, ended lower near the lows of the day. You can see the numbers. We'll go through them a bit. And then, as I said, regional banks getting hit more after hours. So on the day, RG7 actually finished positive, small caps. Despite the fact that regional banks got hit today, small caps ended up positive on the day. It was mostly small cap growth. S&P 500 gapped, opened up 0.15, got as high as about a 0.5% gain, failed into the close, ended up down 0.7%. NASDAQ 100 about the same. Dow slightly worse, down 0.8. Mid caps down a tenth. Russell 2000 small caps up 0.4. Global 60/40. Bonds offsetting the losses in stocks, but still down 0.17. In-house GROTECTION, we were just barely on the positive side today, as a couple of our leading stocks acted extremely well. Our gold and bonds acted well, and the pairs trade that I mentioned last night, which is long inverse financials and long Berkshire Hathaway, gave us some decent returns, and that's actually even better after hours. It's Wednesday, so that means it's weekly chart Wednesday. We'll go through the 2121 list on a weekly chart basis. Let's get right into it now. Here's the S&P 500. Let's go to a 5-minute chart. Doesn't take a genius to see what time Powell spoke. You can see the volatility kicking in. Look at this candle, almost a full percent in 5 minutes. Crazy volatility toward the end here, right after 3 o'clock, where when those two comments came out about inflation and then about not considering cutting rates at all. And then you can see us into the close getting hammered. After hours, the S&P 500 is down 1/3%. Here you can see the break back below the 21 EMA after doing an undercut and reverse yesterday, breaking back below it. So this puts us about 1% from the 50-day, less than 3% from the 200-day moving average. Uh, why do we talk about these averages so much? If you're new, I'll tell you quickly. It's because of protection from bear markets, especially the 200-day moving average. This is where all bear markets occur. Uh, you can feel good if you're a Revere client that your downside is capped at about 3% right now, because that's where we would break below the 200-day moving average, and then we would let the dust settle and see if the market is going to right itself, or if this latest financial crisis is going to be a little bit too much. Is the recession going to be a soft landing, a hard landing? Nobody knows for sure. We do know bad things happen below the 200-day moving average. Before you break the 200, you got to break the 21, then you got to break the 50. And that's why we track those three on a daily basis. And if you're interested in this approach, give us a shout. My email is don@revereasset.com, or my partner, Dan Stewart, dan@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. Let's look at the KRE chart very quickly. After hours, down 4.8%. You can see it new closing lows uh, since we undercut, reclaimed, and then broke down yesterday. Uh, I mean, it's almost comical to listen to the people. Here's Pac West. You can see down now 54% after hours, trading at $3. This was a $30 stock back in February. It's very clear where you can see here on March 9th, when the whole crisis started. Calmed down for a while, but it's reared its ugly head again this week. And you just can't ignore this, and that's why we put that XLF is the ETF, the underlying. So the biggest holding in XLF is Berkshire Hathaway. Really doesn't belong in there. Let's see, BRKB or BRKB. Chart looks fine. Berkshire Hathaway, as long as it holds above the 21. We'll keep holding this, but as far as XLF goes, I mentioned last night we're playing this, hoping that it doesn't happen, because it's not good for the overall market if we have a break of the 21 rolls over again, and we have a free fall like this. But these first two candles are looking like the first two candles that happened up here. And we've rolled over. We failed into the declining 50-day. This is a setup for a short. You can see the relative strength is close to making new lows way before price is, and that echoes the weakness in financials, uh, echoes the weakness in KRE, another ETF, BNKD. This is 10 big financials. The inverse of that was up 5.9% today. After hours, it's up another 4.5%. So this is making money from banks going lower. These ETFs, and a lot of sectors in the S&P 500 still look fine. The financials do not. So we can be long the S&P and short financials at the same time. Let's move on to the NASDAQ 100. Sitting on the 21-day moving average right now, down 0.25% after hours, which would put it right on the 21-day. moving average. As I said, before you break the 50 and the 200, you got to break the 21. Sometimes you play games and you're above and below, but a trend is a trend. When the slope rolls over and you're below it, that's resistance. That's telling you short term. It's an avoid. Let's go to the Dow. Dow failed at this 34,000 level. Undercut, reclaimed the 21 yesterday, closed below the 21 today. It's down a third percent after hours also. Let's go to mid caps. Mid caps ran and during the rally today into the declining 50-day moving average. We're all stacked up here. The 21, the 50, the 8, and the 200 all stacked up here around this 450-ish level. Failed into it. Down 0.5% after hours, and small caps, bless their heart, ran into the declining 21-day moving average today. Closed positive on the day, but down, wow, 0.8% after hours. Tomorrow might be fun. Overnight might be extremely interesting here. Let's get into the rest of the indexes that we review. The inter-asset correlation, here's the VIX. VIX up 3% today. VIX gets above 20. It's at 1834-ish. Okay, that's where it closed. I don't have an after-hours quote on this. Gets above 20, that's where the panic starts. That's where it started in early March with this. That's a real get defensive signal. The dollar today gapped down, which initially helped stocks. So two closes above this declining 21-day, back below it today. Dollar down slightly after hours. Dollar down is good for gold and precious metal stocks. Here's GLD. Breaking out the last 2 days, up another third percent after hours. That looks extremely good. GDX, we're long this in 4% size. Up another 0.4 after hours, breaking above this 35 level. I talked about this setup, how we took it when we broke above the 8. The first day was a loser, but look at the lighter volume on this consolidation here, right along the 21, and then the power volume that came in yesterday when it broke off of that level. That's a great setup, and as I also said, the stochastic perfect setup there. Coming off the 21 with stochastic cross from oversold is a really good setup. So let's finally check silver. Silver up 0.34%. Let's do Bitcoin. Bitcoin is typically risk off, but it is up after hours because when there's issues with the dollar or financials, Bitcoin, like gold, seen as a safety haven. So right now it's hanging around this 200-day or this 50-day moving average after hours, like I said, but this is up 2.3% after hours. So that's going to take it back above the 21-day moving average again. This worked very well back at the beginning of March. This is the period where the fear trade was happening, and then it consolidated along with the regional banks. Let's see if it can get going again. Let's flip to bonds now. Bonds up today. Money flowed into them late. Again, part of a fear trade. Down after hours. However, that might be on light volume. Let's see. No, TLT is like flat after hours. I don't think that's a valid quote. BND. Here's TLT. This is the 30-year. Also up today. That means yields down. Money flowing into bonds drives the price up, drives the yields down. Here's the 30-year yield. Down, but bounced at this 200-day moving average. 0TNX, the 10-year. Down 1%. Looking down at the yields down at the bottom of the range now, putting price back near the top of the range. This is really just a tight range that we've been trading in since the beginning of March when this crisis started. So those are the major inter-asset correlations that we review. Let's get to the tail of the tape now. You can pause it to go through the whole thing. This initiate rally bull case is in peril now. We break back below the 21, at least short term would flip to bearish. 8 a.m. ADP data. This is 2 days in advance of the Friday jobs report, but the number of jobs added was well above expectations, but the market didn't really sell off on it because average hourly earnings were down. And then at 2 p.m., FOMC raised by 25 basis points, said they're not considering cuts, talked about sticky inflation, and that's what sent the market lower into the close. So the day count today, second day down, 2 days under the 8 EMA, first day for the S&P below the 21 EMA. And as I said, we've got coming up Apple tomorrow, NFP report Friday. Expectations flipping from positive to negative if we're below the 21 on the S&P, which is where we closed today. Let's see what was strong today. Home builders continue to be strong. Biotech was strong, and transport strong. Kind of a strange crew. Gold, silver, and gold and silver stocks started weak, ended up positive on the day as the market sold off. KRE started strong, ended up negative on the day, along with the dollar, oils, semiconductors, and staples. I would expect staples to start getting a bid as a fear trade sector also. So no changes to the portfolio today. What we're holding is in blue. Here's some other tickers that I'm going to talk through today. Bottom line, mixed messages from the Fed, but a last hour sell-off ended the day red. Small caps did end up positive. Bigger concern is regional banks after hours. That happened shortly after I finalized this. But let's look at some charts now. Let's start off with three gaps up on earnings. BLDR, this is a building construction products. A lot of good stuff happening in this sector. Big volume, big day up, relative strength at a new high. You know, hard to fathom that you're coming into recession and these types of companies continue to say things are fine, but it is what it is. Wing, another gap up, then sold off hard, but closed near the highs of the day. This gave you a chance down around 200. We didn't take it because of the overhang of the Fed being in a couple of hours, but that's a really nice move for Wing. And SMCI seems to be ignoring the slowing PC demand. Not quite sure how they're doing it, but up 28% to a new high uh, on big volume over 400%. So three strong stocks, very strong gaps, and they held the gaps today. One that didn't gap up, Starbucks gap down, closed near the lows of the day, disappointing numbers. Apple, everybody's going to be looking at this tomorrow after the close, down 2.3% after hours. Qualcomm apparently the cause. Now, this is a weak semiconductor stock. It's down 7% after hours, so making new lows is Qualcomm. That's factoring into Apple after hours. And here's a lesson segueing into don't throw the baby out with the bathwater. This is Estee Lauder down 17% on the day, big gap down. Initially, it's in the cosmetics, personal care sector. Initially, Elf gap down on it too. But look at this. Look at how this is a leader. Look at how this was bought after the gap down immediately. Put in the lows of the day in the first 5 minutes and then just trended higher all day, barely selling off along with the market. That's what leaders do. Undercut, reclaim the 21. Elf has been on the 21-21 list for weeks. And then finally, biotech, which is normally a risk off sector, broke above the 21-day or the 200-day moving average on volume today. I haven't dug into this to really see why. We'll get with the fellas tomorrow and figure it out. But those are the main charts. Let's go now to the 21 over 21 list and look at it on a weekly chart. Let's scan out anything with a flag next to it. We own it. Let's take a look at weeklies. 3 weeks tight for NVIDIA, trying to get higher, being held back by the market. Meta, uh, the gap is on the daily. Tight action after last week's gap, holding up just fine. ON continues to ride this ascending trend line along the lows. It'll be very clear when it breaks it. That's been very consistent and had a very nice day today. Lululemon, same thing, tight action. for 6 weeks now after its gap up on earnings. GDX pullback. This is a cup and handle pattern that it's putting in. This has a possibility of really going higher. 6 weeks up, nice little 2 week consolidation, and now moving off of that. That really looks good. TLT, I skipped that by that too quickly. TLT very tight for 5, 6 weeks. Microsoft, good tight action after its gap up last week on earnings. Uber breaking the downtrend line, gapping up on earnings. We bought this yesterday, didn't add to it today. I want to show the daily chart on this because the day two higher high and the break above the pivot was really good stuff today. Nice to see a day two higher high on any gap up. XLF, now we start getting into the uglies. This is the weekly chart. We're short this by being long FAZ, as you can see here. And then Berkshire, we're long it in the pairs trade, as we expect Berkshire to outperform the rest of that sector, and it's 12% of the XLF sector. Here's BNKD. This is putting in a nice base and just might bust out of it. This is goes up as the top 10 banks in it go down, and they're not banks, they're financials. Schwab is included in there, although Schwab technically does have its own bank. And then there are three other smaller big banks whose charts look like absolute garbage. We're looking at a possible entry into this too. Moving on, General Electric continues to just trudge higher week after week. Lantheus on the 50-day has earnings tomorrow. GE Healthcare, disappointing after earnings, but holding on to the 50-day moving average. Wingstop, there's your weekly chart on it with a big breakout today. ELF looks great on a weekly too. Mondelez consolidating near its high after its earnings gap up last week. FedEx, nice tight action, not doing the sell-off that UPS did. Ferrari has earnings tomorrow, nice tight action. Home builders continue to make higher highs, just good stuff. DraftKings has earnings tomorrow at the top of its base. Las Vegas Sands pullback today, but still a good chart. Intuitive Surgical, tight action near the top of its base after gapping last week on earnings. And in that sector, medical devices, nice tight action at the top of its range. Some things are working, some things aren't. We tell you which ones are and aren't every night, excuse me, here on the Revere Daily Market Insight video. And with that, I'm going to wrap it up. Remember, it's not how much you make in the markets, it's how much of that you can keep. That might be getting more crucial if this regional banking crisis continues. I don't know. Something's got to give. You just can't. Basically, it looks like all the big banks are lining up to take over these smaller banks, and the Fed's responsible for it, and they're okay with it happening. That's what it seems like. So, credit unions can't pay out any interest. We've gone over the story and over and over why they can't. And everybody's flocking to treasuries. And if they're keeping rates higher for longer, expect those treasury bills to go higher too. You can get near 5% now, which is pretty nice. So that's going to wrap it. Don Vandenbord telling it like it is. Revere Asset Management wrapping up Wednesday, 5-3. Interesting tomorrow after hours with Apple and with what happens with the banks tomorrow, as there seems to be some sort of panic creeping into the situation. Thanks for listening and have a great day.